Uh-oh. Sounds like somebody's got a case of the Mondays.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker, licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Based in Silicon Valley and helping people reach their real estate needs since 1988, which is a really long time ago. If you're interested in buying, selling, and investing in real estate, feel free to check in with me. Head over to my website, soldbyrobert.com. And you can either get an instant valuation on the estimated value of your home, or if you're shopping for a home, there's a tool right there on the front page to get you started so that you can start your search right now. And the best part is, you don't have to talk to a real estate agent to do either thing. If you just want to get some information and you just want to start checking things out, because knowledge is power, that's a great place to start. So again, soldbyrobert.com is the site. Two tools right there, front and center. I don't hide them. They're just right there at the front page. Now, we've got some interesting stuff to kick around today. A couple of thoughts I want you to put into your head because we have an interesting opportunity, a window of time. Now, for those of you who checked in with me over the weekend, you know that we did Coffee and Real Estate, the Coffee and Real Estate live chat, which happens on the third Saturday of every month. We did that one just over the weekend, over the Father's Day weekend, and discussed some interesting topics. Right there at the end, we got a couple of interesting comments from folks, so that was a fun one. But, you know, as I was reading different articles over the weekend, something came across my desk that I thought was really worth mentioning. And in order to really give you the context, it covers something we actually did talk about in the live chat, but it's the home starts, right? The big headlines right now are construction starts are way down. And this is true. But as with most things, there is usually some sort of a lag time between a start and a finish of a thing, right? And frequently, if we are in a market where things are pivoting, that can represent a window of opportunity. And I think it might be an interesting one for us because it is absolutely true that home starts are way down. While home starts are way down, we are going to see a pretty decent jump in home completions in 2022. Now, we've seen increases in home completions basically since 2012 each year. We have not come anywhere near the peak that we were at just before the downturn in 2005, 2006, or the dramatic construction that was going on in 1973, 1974, or 72, 73, right in that ballpark. But for the context of where the market needs it to be in order for there to be a little bit more balance, we are shortly creeping up to that point. We're now probably at about, there's a chart on the article that I'm going to link in the description of this show. So if you check out the show notes for today's show, you'll see a link to this article. We get an interesting insight into where we've been, and we have been crawling out of this pit of low construction basically for 10 years, over 10 years. And 2022 is set to be one year where we actually take a really big step toward completing more homes. And I realize that is absolutely at odds with starts, but remember, there's a lot of lag time between when the construction process begins and then when homes actually come on the market. So the good news is in 2022, we're going to see that happening. And what's interesting about this and why I think this potentially spells opportunity for buyers and investors is we are seeing so much of a pullback in the market right now. If we look at other data in terms of inventory, for instance, if we look at the most recent numbers, and this is an article from Calculated Risk for the 20th, So for today, the day I'm recording this show, inventory is up 18.5% from the same time last year. Now that's nationally. When I started this discussion a week or two ago about what's going on with inventory, the national average increase in inventory was 11%. And at the same time it was 11% for the nation, it was 24% in Santa Clara County. Well, then that went up to 14%, and now it's up to 18.5% compared to the same time last year. So we're seeing an interesting ramp up in the overall inventory of properties. At the same time, we're seeing a ramp up of new construction being completed. So what this kind of spells out for me is an interesting window of opportunity as we've seen interest rates go up and we've seen folks retreat back a bit from buying. We've seen that buying trend move towards lower priced homes. We haven't seen a huge drop in the number of buyers. Now, I absolutely, from an anecdotal standpoint, don't have as many folks looking to buy, or at least as seriously looking to buy as I did a year ago. But I think this spells an interesting opportunity for buyers and investors to potentially acquire properties at the tail end of this year in a way that we haven't seen in years, meaning you don't have dozens of competing buyer offers coming in on the same home. You actually have an opportunity to come in with an offer below asking price and get it. Now, in the Coffee and Real Estate we talked about on Saturday, one of the things we do in Coffee and Real Estate is review the most recent data. And one of those pieces of data was a pretty big disconnect between expectations and what folks are now getting. We actually saw a scenario where the average home sales price in some areas is now below what the list price was. And that has not happened for at least a year. So when you see all of these stats sort of converging, I think that spells opportunity for later this year or for the remainder of this year. If you are looking to invest, and because we're also seeing increases in the number of duplexes, triplexes, and quads that are being built, and that's been across the board, right? So multifamily, apartment complexes, single-family residential, in all of these categories, completions are going to be up for 2022. So my suggestion is start trimming your searches, or if you don't have a search, create one for a home. And of course, you can do that at soldbyrobert.com. And just start seeing what comes up. If you've been disappointed in the past, if you're a discouraged buyer who now still finds yourself stuck renting, I would suggest, and I suggest you always do this, frankly, even if you are a person who owns your home, you've lived in it for 20 years, and you plan on never moving ever in your life, that you're not going to leave that house till they take you out feet first, I think it is good for you to get a regular search for your neighborhood that you get sent once a week or once a month, whatever. Usually there's options, right? As a real estate agent, I can set it up so it's instant as soon as a home comes on the market, or summarized by the day, summarized by the week, or summarized by the month. I suggest you do that just so you have a feel for it. Even if you're just doing retirement planning, you can calculate what your equity is at any one moment on your home, right? So I think that's a smart move for homeowners. But if you're a home buyer who has given up, let me suggest you return to the table. Get yourself a search going, because I honestly believe that you may find yourself in a unique opportunity as we approach the last half of 2022. Now, does that mean that I expect things to change in 2023 and for this to be a window that is going to close quickly? Honestly, I don't think so. I think this may be the beginning of a window, but I also believe that we're going to see much more of a unpleasant increase in interest rates, even though we're now over 6%. You know, in my head, 6% is bad compared to last year or the year before or the year before that. But when I think about it, when I got into real estate in 1988, you know, interest rates were double digit. Interest rates were, 13%, 14%. And I've told this story before, but I can remember the week when interest rates went below 10% and people started buying up properties like crazy because they thought we would never see 9% interest rates again. We'd be down at 9% for a little while, and then we'd jump right back up to 10 point something or 11 point something. So much of this is context, right, on what your experience has personally been. And you need to step back and realize that normal interest rates, they're higher where we are now. I mean, if you average out interest rates over the course of decades, and in this case, you have to do more than decades, right, because we've had very low interest rates for a decade or more. But if you look at it over the last, say, 40 years, the average is more like 9%, right? It's still much higher than it is now. And obviously, the government has decided they want to try to solve the inflation problem first. So that means they're going to continue to raise interest rates until that does it. And so much money has been printed, I don't think we start to put a dent in that until we get into double digits. And I'm not an economist. I'm just a real estate guy who reads a lot. But I think that's worth talking about. If anyone out there actually has other opinions on this subject, I'd love to hear it. And if you've got articles you can suggest I take a look at, I would love to do that. Now, let's see here. I wanted to see if there's any other tidbits in this. As of June 17th, inventory was up 419,000 7-day average compared to 396 compared to the prior week. Inventory was up 5.6% from the previous week. So just over the course of a week, it was up 5.6. Inventory is increasing much faster than normal for this time of year, both in percentage terms and in total inventory added. In terms of, there was one other tidbit here. Single-family completions will increase to around 1.1 million from 970,000 in 2021. Multifamily, including 2 to 4 units, will increase to around 460,000 from 364,000 in 2021. So this is basically comparing the completions that are going to happen in 2022 compared to what completions we had in 2021. Manufactured homes will increase to around 120,000 from 106,000 last year. And this article goes on to state that the reason there will be so many completions in 2022 is because there is a record number of housing units under construction right now. And we talked about this, right? This was one of the headlines I sort of debunked a few shows back, where they talked about how compare this to 1972, 73, 74. Well, we have double the population now. So if you take that into account, it's really not that much of an accomplishment to think that we are matching a time when we had half the number of bodies in the state. That should scare the heck out of anybody. We don't want to be there. We want to be higher than that. But in any event, I think this is as predictions go, as predictions I've thrown out there before, I think it is a good move right now to definitely at least be testing the waters. Make sure you're informed on what's happening with your local markets. The amount of inventory increase that we're seeing is happening at a rate I had not expected. I expected to see a gradual increase in, let's call it organic inventory, organic being everything but new construction, right? So things that are organic because a human being decides in their personal life to sell their house versus a company that's now built 50 homes that they're going to put on the market because they're done building them, right? That's not an industry term. I realize I'm making this up on the fly, but let's sort of think of it in those two veins. Now that you're combining increases in inventory that are coming from quote unquote organic sources, meaning just folks deciding to put their homes on the market, people who have decided to try to take the profit out of their homes because they see potentially us being at a peak, plus the completions that were already started. You don't just stop building, right? Even if you believe the market's going to take a bit of a dump, you still finish those houses. And we had a record number in 2022. So those are all going to get done. That's going to create a scenario where we've got a lot of new construction competing with new construction in a way we haven't seen before. So I think this spells potentially two opportunities. One, the potential advantage that I already talked about, where there's simply going to be more homes on the ground available for you to make offers on. But I also believe that the competition between those two segments of the market may be enough to drive down the asking price on new construction. You may be able to get new construction at a much more reasonable cost. We'll see how that plays out. I think that that whoever's building homes right now needs to get those done ASAP, because with the numbers we're seeing on inventory now, if they continue on, the likelihood is that buyers are going to have a lot of choices. A lot of buyers have gone to new construction simply because they had no other choices. Now that's changing. What's going to be interesting is I would love a breakdown in what is the price band breakup on this new construction. Does this because new construction we've seen in the past tended to emphasize the higher end. And a lot of people get upset about the higher end, but I'll tell you, from my experience the last time around when we had a downturn, high end quickly becomes homes that sell at middle ground prices when they don't sell. So today's luxury home could be tomorrow's mainstream home. And I think this is an interesting situation where we're going to watch these new construction homes come on the marketplace. And since we're already seeing a softening at the high end, right? The softening that's happening at the high end is because of financing. With interest rates where they are, people are simply saying, all right, I'm not going to max out my purchase price. Or I can't max out what I was, right? That under the new reality, I was approved for 1.8. Well, now I need to buy at 1.5 or 1.4 or 1.3. And because I'm worried about the economy, because I'm worried about recession, because I'm worried about inflation, while I could buy at 1.4, I'm gonna hold back. I'm gonna hold back to 1.2. I want to be able to put more money away. I want to be able to save enough money that I could survive for 6 months to a year if I lose my job, right? Is everybody thinking that way? No. But I think there are enough people that it'll be statistically significant. We're always going to have those folks who ride the edge of the razor blade financially. But when you start to see sort of the herd movement, right? You always have those stragglers, but that herd movement is, I'm getting a lot more feelings of paranoia from folks out in the world when they're thinking about, and I think that's a natural instinct, and I think it is wise to listen to your gut. If you feel like your job is one that could be cut or historically at your company has been cut during tough financial times, I think that is something to keep in your head and make part of your decision-making process. But if you are looking for that opportunity to buy and you feel comfortable enough to make a purchase, I think an opportunity will be coming for you over the next year, all through 2022 as we see more of these homes come online. But I think the potential is that in 2023, a whole lot of our inventory problems may have gone away as folks jumped into the market and as more people jump into the market simply because it's not an option for them anymore. It becomes something they must do as a result of economic issues, pressures relating to recession and inflation. Because we haven't really seen the full force of the recession kick in yet, right? It's amazing how much things have just changed in a week or two. I mean, when I did my interview with Michael Hellickson from Club Wealth, I did that on a Friday. And we were theorizing about where the economy might go and how bad things might get. And it was that following Monday that the stock market took that 30% dive, just took a huge dump. So the things we were theorizing about, bricks in that wall materialized 3 days later. So I think that's interesting stuff to keep in mind. And again, that's the podcast from a week ago, I believe. So it came out last Monday. Feel free to check that out. The podcast is available, again, on my website, soldbyrobert.com. I also give it its own little way to get to it. Go to therebelbroker.com, therebelbroker.com, and you'll be able to get right to the main page for the podcast if you want to check that out. All right, I hope that's been valuable for you. I think right now this spells opportunity. I want to make sure everybody who's in the various segments has some feedback here. For you buyers and investors, I think opportunity is potentially knocking. Start getting searches going that meet your criteria or meet criteria you feel like could be profitable for you, and just keep an eye on them. Watch them come by. Let them sort of wash over you so you can get a feeling for where prices are going, how long homes are staying on the market, that sort of thing. For you sellers out there, if you believe that you are going to sell your home next year or in 2024, or you might want to consider accelerating your plans to take advantage of what values are right now. And that's going to depend on your situation. Right now, today, there are absolutely still communities in Silicon Valley and Morgan Hill and Gilroy that are super desirable and are continuing to see multiple offers. That's always true. But if you have a mainstream home and you are in a market that doesn't tend to be at the top of desirability, you may want to think about whether or not it's wise for you to take out your equity and find another option for yourself. You could downsize, pocket some of that equity, or buy an investment property, or get into home hacking. We talked about that on the live chat on Saturday as well. If you want to check that out over at Facebook, you can go to facebook.com. Just do a search on White Law Real Estate, and it'll come up. I think you can do Rebel Broker as well, and it'll come up there as well. But anyway, that would be my suggestions right now this week. Buyers and investors, put your eye on the ball. Get into the game. Let's see you doing some searches for things that fit your needs or fit the criteria you have for a property, and just keep watching it happen over the next few months. Sellers, really evaluate where you are. Determine whether or not you're in a market that's going to remain super desirable. I would hate for you to be forced to sell at a much more disadvantageous time for you, which could be as little as 8 months away, 9 months away, rather than doing it now when you're potentially at the peak. Okay? All right, folks. That's it for me today. I do appreciate you spending your valuable time with me. The goal, as always, is to leave you with more value on the table in terms of knowledge than you invest in time. Hope we've achieved that today. Thanks again for listening, and I will talk to you all next week.